So we have more theory to cover today, and we've got some calculations in chapter 15. It's more maths than anything else. In terms of accounting, study unit 14 is actually important because it's specific for you guys as law practitioners. Study unit 14 is looking at financial accounting for law. So we know accounting is what? What is that? Recording of information, correct? Okay, you could say that. Accounting is just a language for communicating information, as you said. Financial information needs to be recorded and disclosed in the accounting records of the business. So that's what we're looking at. So for a law firm, the law firm is obviously going to have slightly different accounts to consider because you have clients and your clients are represented by the law firm. So when looking at a law practice, what relationship exists between these two parties? When looking at the actual law practice and the client, what relationship is there? What do you think? The relationship between these two parties. So the law practice and the client. Is there a relation between those two parties? Yes. Okay, so who's representing who? Okay. Okay, good. So the law practice is representing the client, and as you said, they're offering a service. That's the focus in terms of law, different areas of law. So the client is actually going to be compensating or remunerating the law practice for their services. So now, if I'm a law practice, do you want efficiency? Do you want to be able to do your work? Yes. Do you want to have to always go to the client and ask for permission to do certain things? No. Do you want to go to the client and ask for money to pay for certain things? No. Okay, so with a financial accounting, let's say, how can I put it? It's almost like keeping records separate, but you're accounting for the client and you're accounting for the law practice. And we call those trust accounts. Okay, so that's what you're actually looking at here. The relationship is actually built on trust. Okay, so if the client wants you to represent them, you need to disclose all that information to your law practitioner, okay, the attorney, the person representing you. Okay, because as a client, you've got someone who's representing you. So you've got that agent, if you will, okay, that's acting on your behalf. Right, obviously, lawyers have a very specific skill set, okay, in a specific area. So the client doesn't have that information. The client doesn't know what all the rules and laws are. Okay, yes, common things they should know, but obviously more detailed stuff they're not going to know. So that's why they have people representing them. Okay, specialists, people that actually represent the client, but when looking at the actual remuneration, the client is the one paying for the I want to use the word services, but it's more for like the representation, the actual the time and the effort that the law practitioner is going to put in to representing the client. Okay, so if the lawyer is going to have to appear in court on behalf of the client, perhaps, maybe to represent them, if there's something that's being discussed, then the lawyer. So, for example, sometimes people say, don't talk to me, talk to my lawyer. Why? Because they're paying that individual to represent them. Okay, because that individual has the necessary skill, the necessary knowledge, the necessary expertise to better manage certain situations. Right, so as an individual, if you don't have that knowledge, you would rather want your lawyer or someone in that position to represent you. because hopefully they would be able to make better decisions, or at least understand the situation better, so they can then come back to the client and give feedback or communicate the message. Right, and that's what lawyers are basically for. It's basically looking at expertise or knowledge in a specific area representing someone else, okay, the client. So if you're looking at trust here, the law practice is obviously going to trust the client, and the client is obviously going to trust the law practice. So when focusing on the finance side of things, okay, the financial, accounting, do you agree? Obviously, for things to run smoothly, you're going to need money as part of the relationship. Okay, so money is going to be given to the law practice coming from the client. Okay, but whose money is it? It's the client's until the law practice has done something. Okay, so when looking at this trust, you're looking at the client. So for example, it's like safekeeping. Okay, we're going to give the law practice X amount of money to facilitate and to do what they're supposed to. Right, and if they do something, then they have to bill it. Okay, they have to bill it to the client's account. Okay, and that's what you're basically looking at. You're looking at the law practice. So what is the law practice going to do? Well, they're going to operate. Is the law practice separate? Yes. The law practice is a business. The law practice will have its own income. The law practice will have its own expenses. Okay, it's operating like a business. But at the same time, the law practice is going to keep record of all the clients' income and expenses. Okay, in other words, trust accounting. See, that's the important bit. Okay, because we said the relationship between the law practice and the client is built on trust. And money is going to be part of the resources that both are going to require in order to do certain things. Okay, so the client wants something to be done. Let's say the client has bought property. Okay, obviously they need lawyers to help with the transfer and the bond registration, all of that stuff. Okay, so if that's the case, then the law practice is going to be acting on the client's behalf, because the client wouldn't be able to do it themselves. Okay, the client isn't going to be able to go register the deed at the deeds office. The client isn't going to be able to register the bond. Okay, the client is going to need help from a lawyer, okay, a conveyancer, to facilitate that transaction. And that's why you have trust accounting, because resources need to be given to the law practice to do what the client is wanting. Okay, and that's what we're looking at here. So study unit 14 is looking at this whole relationship between business and client. Okay, remember, it's the law practice's responsibility to keep record of all the transactions that take place, because remember, they'll have their own income and expenses, but at the same time, they're going to have expenses and income from a, inverted commas, client point of view, but it's in their books, okay, because they manage that. The client is going to pay for services, and funds are going to be available for those legal expenses. Obviously, a legal expense would be an expense for the client, but income for the law practice. Okay, because if the law practice is rendering a service, that'll be a legal expense for the client, but it's income for the law practice. Make sense? Okay, so the textbook gives you some scenarios where they look at journals and they look at ledgers. Okay, we're going to discuss that just now. For now, I just want to make a point clear in terms of keeping separate records. Okay, am I going to know what's the business and what's the client if I keep everything in one account? No. Okay, so we're going to have separate accounts for everything. Okay, we'll have a separate account for the client. We'll have a separate journal for the client. Okay, we'll have like a trust accounting journal, and then we'll have normal accounting journals, because the journals that we use normally are for the business, and the journals that we use for the client will be for the client. Okay, that's what you've got here. So when looking at a law practice, we just said trust is important. So things need to be separate. Okay, we can't say, well, what's the client is ours. Okay, that's not ethical. Okay, you can't say, well, the client's money is my money if you're running the law practice. You can't say that, because the client's money is the client's money until you've earned it. Okay, so as a law practitioner, once you've done something, then you could be generating income or entitled to income. So the law practice, trust is important, keep a separate account for the client. If I receive cash, remember we said it's not ours until we've earned it. That's the accounting concept. Income is recorded when you earn it. If I receive cash, but it's safekeeping, meaning on behalf of my client, then I need to show that as a separate transaction. Okay, separate from the business's records. Okay, and you'll have a separate trust account. Okay, so again, another thing is you can't have a bank account for the business and then a bank account for the clients in one account. Right, it must be separate. So we have to have a separate bank account for the clients, a trust account, and then a separate account for the business, a business's bank account. Okay, the transactional account. So when we look at income and expenses, are we going to account for them? Yes. And we're going to account for both. You'll account for the income and expenses of the business, and you'll also account for the income and expenses for the clients. Okay, the client will probably have more expenses than income. They're not really going to receive anything. Okay, it's more they're using resources to pay for certain things that have to be done. So when looking at a client, we're going to have this, a trust account or journals that's going to be separate, and we're going to keep things safe. In other words, we're going to keep track of what's happening in the client's books. Right, the client is going to have a separate journal looking at all the transactions that took place for that particular client. And that's going to be client money. Right, so when looking at any question, you always need to identify whose expense is it or whose income is it. And you also need to look at, well, is it the business's expense or is it the client's expense? If it's the client's expense, it'll go to the client's account. If it's a business expense, it'll go to the business account. Okay, and you'll treat it normally. Okay, so the only thing new here in this particular section is the word like trust. Okay, trust accounting, trust journals, trust CPJ, trust CRJ. Okay, it's all related to the client. Okay, the client is separate from the business, and we need to account for it as is. Okay, so let's have a look at examples before we look at the next study unit. You'll see in study unit 14, okay, with study unit 14, you can't refer to the textbook. Okay, so if you have purchased that textbook as an additional resource, you won't find any of this in the textbook. All of this relates to a law practitioner, so all of this must be referenced from your study guide. Okay, this is the only place where you're going to see information about this. You're not going to find this anywhere else. Right, so having said that, UNISA does test this because it's actually UNISA content. Right, it's content that they've created in the last few chapters. Okay, obviously, ratios, that's universal. Okay, so chapter 15 can be used in lots of different subjects, but the chapters that are theory related, so this one, 14 and 16, they're very theoretical because they talk about things like managing the business. Here we're looking at financial accounting for the law practitioner, for the actual practice, okay, the law practice. Okay, so a lot of different transactions can arise, and that's the first bit. So let's have a look at those examples. Cash received on behalf of clients which must be held in trust, or which must be dealt with according to express instructions. So let's have a look at that first sentence. Cash received on behalf of clients which must be held in trust. Are you going to view that as a liability or an asset? From the practices, the law practices point of view. On behalf of the clients, it's a liability. Okay, well, similar to liability. Okay, because remember, it's not yours, it's theirs. Yeah, cash received on behalf of a client. Okay, so you would have to account for it as an amount of money that was set aside from the business's resources that's specific to the client. Okay, a client offers to purchase a piece of land subject to the granting of a building society bond of at least 80% of the purchase price. The client entrusts all his or her affairs to his or her attorney and hands the attorney a check to cover the deposit and other possible expenses. Okay, so remember we said lawyers, attorneys are representing their client. So obviously this individual isn't going to be able to do all of this, okay, in terms of the, let's say the legal process that needs to go through in terms of registering this bond. Okay, so what do? They get someone to act on their behalf. But that individual, the attorney, they're going to need resources to do it, right? So where does that come from? Comes from the client. Okay, the client gives that attorney power to use those funds, but remember, those funds are set aside only for the client. Okay, so it's almost like keeping the client's stuff away from yours. So, like, do you have siblings? Yeah. You do? Okay, so do you share everything with your siblings, or are certain things yours and are certain things theirs? It's probably a bit of both, right? There's probably certain things that you guys share, and there's probably certain things that you don't. Okay, so if that's the case, obviously things that are yours, you would want to keep in your own maybe room. Okay, so this is my room, or this is my space. Okay, this is my stuff. All right, don't come and interfere with this. Okay, but at the same time, there could be public stuff. Okay, stuff that both of you or all of you share. Okay, and then anyone can use that. Right, but now with trust accounting, it's very separate. Okay, what's yours is yours, what's mine is mine, and it has to be kept separate. So the business is going to have their own cash, and the client will have their own cash. So if you are going to be representing your client, this check that they gave you for doing what you're supposed to here is going to have to be recorded separately. Right, so as a law practice, you're going to have to recognize and acknowledge that the client gave you X. And this is going to be used for X, Y, and Z in order to do what you were supposed to. Okay, in this case, granting the bond. Okay, it's probably bond registration, something along those lines. The attorney is now responsible for safekeeping of such money until the transaction is concluded or the offer lapses. Furthermore, he or she has to act in accordance with his or her client's instructions. Okay, remember, as a lawyer, you're representing the client. Okay, the client tells you what they're expecting. Okay, so I want the bond to be registered, or I want the property to be transferred into my name. Okay, and then it's up to the attorney to actually get it done. Right, and that's what you're looking at here. Okay, so in the above example, the following situations could occur. Obviously, the offer can lapse. If the offer lapses, has the deal gone through? No, it hasn't. Okay, so whose money do you still have? The client's money, exactly. So can you keep it? No, you can't. You have to refund all of it back to the client because it didn't happen. Okay. If the registration of transfer and the approval mortgage was entrusted to another attorney, the deposit and related expenses must be paid over to the transferring attorney on request. Okay, so obviously there's a relationship between the client, okay, and his attorney, and if something needs to be done, there needs to be a payment that must be made to the transferring attorney. And then the third was a registration of transfer and the approval mortgage takes place. The related expenses are charged and transferred from the trust funds and the necessary payments made to the seller. Surplus funds are paid to the client. Okay, so that's obviously when the deal actually goes through and things are registered. Now, obviously, payments need to be made. Okay, so payments need to be made to the relevant parties, and who actually pays for it? The client. Okay, it's the client's money that pays for those expenses because it's the client's property. Okay. Right, this bullet says, cash received from clients as payment of fees which they were charged. Not an asset. For who? Exactly, for the law practice. So cash received from client as payment of fees which they were charged. If you charge your client a fee, they pay you that fee, and that fee to you as the business is seen as a income. Trust money paid to clients or the rightful recipients after fees and expenses rightfully due to the attorneys have been deducted. What's that looking at? Why do you say liability? You're right. Just explain.
Obviously, the client gives you money to go back to the and then you've done everything that was supposed to be done with the money, but there's left.
Exactly. Okay, it's a surplus. Yeah.
So it has to be returned to the client.
Correct. Okay, you can't keep the surplus. Anything that's due to the client is due to the client. Right. Expenses paid on behalf of the clients. Expense for who? For the client. Good. Okay, so expenses for the client must be paid by the client. Okay, so that will come out of where? The client's resources. Okay, expenses of the business will be recorded by the business, exactly. Okay, so here they've given you some situations. This situation was dealt with above. Payment of general office expense and personal withdrawals. There's another bullet. Separate bullets. Different scenario. Whose expense? The business. Normal expense that the business is going to have to pay with their own resources. Charging of fees for services rendered. Income for the business. Transfer of money from the trust bank account to the business bank account. No, it's not income for the business. Okay, well, when you say income for the business, okay, yes. Okay, so transfer of money from the trust account to the business, meaning the business has done something, okay, and they're entitled to the funds, right? And that's why the funds are being transferred from the trust account to the business. Okay, so when we focus on this word trust, what is that referring to? The client or the business? Correct. Okay, so wherever you see the word trust, trust CPJ, trust CRJ, trust bank accounts, it's always going to be the clients, exactly. And then obviously business is business. Okay, the practice. Got that? Okay. Transactions with correspondence. Well, this could be something that you might have to recruit in terms of maybe your law practice doesn't cover all the areas of law. Okay, and in order to meet the client's expectations and instructions, you might require the services of someone else. Okay, so there could be maybe a correspondent, something like maybe like a sheriff that needs to deliver notice. Okay, so you would have to pay the sheriff, and the sheriff would do the delivery of the notice. Okay, something like that. Okay, so attorneys often appoint other attorneys to do certain work on their behalf. Right, then you've got handling of the trust money in law practice. I actually want to look at an example here. There, books of first entry. Trust CRJ. Whose records? Good. What does this record of the client? Any receipts, exactly. Okay, so on receipt of trust money, an attorney must issue a proper receipt to the payer. Okay, notice, receiving money. We are trusted with those resources. So the attorney has to provide record that you received a certain amount of money from a specific client. Are you going to have one client or many? You're going to have lots of different clients. Okay, and if that's the case, you're going to have lots of different receipts. Okay, because each client is going to have their own resources. Okay, their own like funds with the attorney. Okay. Right, such receipts must be bound in numerical sequence and properly accounted for. Okay, obviously that's record keeping. Okay, just to show the example here, there's one. Trust receipts journal of legal. Okay, obviously that's the practice, right? Okay, so the following example of the columns usually encountered in a trust receipts journal. So let's interpret what happened here. Okay, when looking at this journal, okay, book of first entry, we're looking at the books of legal. Legal has how many clients? 2, J and P. When looking at the records, bank and trust payables is what we're recording there. Why? Because remember we spoke about the money. Whose money is it? The client's money. So how are we going to view it? As a liability. Okay, so trust payables meaning it's still owed to the client. It's a payable. It's something that's an obligation, meeting the definition of a liability. Bank is bank. Bank is a asset, exactly. Okay, so the trust payables ledger is compiled from the trust receipts book, whereas the trust payables control account pertaining to receipts is compiled from the general ledger from the total of the trust cash receipts journal. Okay, then they've given you just some formats, and then they've given you a note here. A trust check may only be issued after the following considerations have been taken into account. The trust check was issued in favor of the client or his beneficiary. Why? Why is the trust check issued in favor of the client or his beneficiary? Okay, exactly. Right, it's specific to that party. Supportive documentation is available, and the trust check is issued in respect of the specific trust matter. Okay, so obviously matter is, what is it for? Exactly. What is it, what's the purpose of it? Okay. The trust cash payments journal, now we look at the payments, the opposite. Okay, bank charges and interest on the trust bank account. Who pays for that? It would be the client's expense, right? Because you're keeping the client's money in a client's bank account, basically. Okay, so a law practice always has two accounts with the bank. See? Business bank account, trust bank account. Okay, we spoke about that. You can't have one account and say, well, a portion of it is mine and a portion of it is my client's. It must be totally separate. Bank charges in respect of the trust account can be dealt with in two ways, namely by debiting the trust bank statement with the bank charges in respect of the trust account, or debiting the business's bank account. Why would you debit the business's bank account? It could be viewed as what? A company resource that they've provided that's going to help them render their service. Okay, so you might say, well, I'm not going to charge my clients the bank charges of the bank account because I might have 10, 20, 30, 40 different clients. Okay, so now how do we split a bank charge amongst 30 or 40 different clients? Okay, it's a bit difficult. Okay, if you've got one client, well then it's easy. You can just charge it to them. Okay, and if you can identify the fees, you can just charge it to them. Okay, you can't charge your client fees that aren't theirs. Okay, so if you've got a trust account for all your clients, okay, you can't charge one client the fees for that account and not charge another. If you're charging your clients, then they must all pay for it. Okay, or the business can pay for it. The business can say, well, it's an operational cost. Okay, for having a trust account with the bank, separate account, we're going to have to take the cost of that product. Makes sense? Okay, right, and then they describe that in more detail here. It's all background information. I haven't seen them test too much of this in past papers. It's generally a practical question. They give you transactions and then they ask you to record it. Record in the trust account, record in the CPJ, record it in the journal, etc. Okay, so here's a note. Trust cash payments. That's what it looks like. You'll have details here. B cross, B cross. Remember whose records is this? The business. Okay, so there were checks here. Trust payables and the bank. Okay, so the first amount was the municipal rate. So what happened here? Exactly. Remember, well, not really the client. The client paid it, but the law practice paid it on behalf of the client. Did that make sense? Okay, so the law practice paid this on behalf of the client, and it came from the trust bank account. Okay. And then the same thing with this one as well. Do you agree? Something that the client has to pay that comes out of the trust account. Okay, good. Right, there can be other journals as well. Errors can be corrected, and that will obviously be corrected in the general journal. General journal is always used for errors. Okay, fixing errors. Debit something, credit something else. Right, a transfer procedures are one of the most important accounting procedures performed in an attorney's practice. Two sets of accounting records, namely the business and the trust accounts in the attorney's practice, are explained in the previous sections. Okay, we know what those are now. These accounting records are connected by executing transfer procedures. Okay, what does it mean to transfer something? To take it from one spot to put it in another. Okay, that's what you're looking at here when looking at transfers. You might have to take something from this account, move it to that account. Okay, then they've given you some transfer requirements here. Before a transfer can be made from the trust to the business account, the following requirements should be met. The client should owe an amount to the practice in his or her business account, and funds should simultaneously be available on his or her trust account in order to do the transfer. Okay, so obviously there needs to be money in your client's account before you can transfer to your account. If the amount owing on the client's business account exceeds the amount available on his or her account, the amount transferred is limited to the amount available on the client's trust account. Okay, obviously you can't pay more from that account if there isn't enough. Okay, remember, businesses have bank accounts. Right, that bank account maybe or maybe not, it might or might not rather, have a overdraft facility. If it doesn't, you can't pay more than what's in there. Okay. Then you've got a transfer journal, which is basically the transferring. Where's the example? First example. No, not quite that yet. That's still a transfer journal. Transfer payables ledger. Let's look at, there we go. Perfect. Okay, so here's your first example. Unpaid checks of trust creditors. Okay, quickly read these three transactions, and I want you to tell me, is this a business transaction or is this a client transaction? Right, so you've looked at these three individually. Let's start with number one. Attorney G. Swan received a check of 4,000 from A. Zell, being a deposit for defense of his court case. Client or the business? Why? Exactly. So the attorney is representing the client. The attorney is going to need resources to represent the client. So the client has given the attorney resources. But whose resources are they? They're still the client's. Good. Okay, so 4,000 is going to be seen as what? From the business's point of view? A liability. Okay, there we go. So in the trust payables account, what do you see here? 4,000 as a credit. Why? It's a liability. Right, there's an amount that's still owed to the client. Next, Attorney G paid 1,000 from the trust bank account to Advocate SG in respect of the case Z. What are we going to do? Okay, so the attorney, no, but remember, let me ask you this. Whose expense is it? That's important. Okay, you need to know whose expense is it. Is this something that the business is using in terms of operations, or is this something that the client is going to have to pay because they wanted the help? Okay, so which is it? Exactly, that's important. Client expense. Right, so yes, the attorney paid it, but the attorney would have paid it from whose resources? The client's, exactly. Because this is something that the client was asked, okay, for you to do in terms of representation. Okay. Right, and you can see that here. Trust payables, notice, there's a 1,000 there that's decreasing from the trust payables. Why? No longer owe them 4,000. I now owe them 3,000 because you've reduced some of it. Okay. All right, then the last one, a check of Zell was returned by the bank marked RD. Okay, you saw RD checks in the bank recon. Okay, this is more bank recon than anything else. There's no chapter 14 here. This is your previous bank reconciliation. Okay, where do you put bank, where do we put checks RD? Receipt or payment? Payment. Okay, remember, it's a dishonored check. Dishonored checks always go to the CPJ. Okay, so when looking at this, did the check actually go through? No, it didn't. So good or bad client? Why? You thought you had resources for the client, but did you? No, you didn't. Okay, this client said, well, here's 4,000, go defend me in court. That's what they said. They said, let me write you a check. Did the check go through? No. So do you have resources for this client? No, you don't. Okay, so what did we do? We removed the 4,000 because we no longer have a client that we owe. because the 4,000 that we thought we received from the client didn't actually go to the trust account. And that's problematic. Why? Because now you need to follow up and you need to try get funds or resources from the client because they're the one wanting this case to be defended. Does it make sense? Okay, so the general ledger here is obviously going to be the balance on the account, okay, the trust bank account. Right, so if I'm looking at a trust bank account, I'm looking at the money that is owed by the, or not owed by the, owed to the client. Okay, because the trust bank account represents client money. That's what the trust account is actually looking at. Okay, so you can see they reversed out the accounts. Okay, that's the reversal. The reversal of what? The check that you thought that you received. Makes sense? Okay. Right, let's go look at the next one. Here's it. 15. What happened? Describe what happened first, and then we'll talk about whose transaction is this. Okay, so nice attorney to have.
Very nice.
Okay, why? The attorney said, well, let's write out a business check and let's put that in the trust account so we can top up the client's money so we can still do what we were supposed to. Okay, so a transfer journal entry must be made to rectify the account of AZL in the trust payables ledger. Okay, we need to correct it, okay, because it's a journal that needs to transfer, okay, from one journal to another, okay, one balance to another. Right, so there's the transfer. Client, creditor. Okay, so did we have a debit or a credit on the client's account? Have a look. We would have a debit here. Why? This side was bigger, right? Okay, so that side's bigger. Is the client owing you or you owing the client? The client is actually owing you. Why? You never got the funds that you were promised. Okay, so you might have, maybe have done the work already. Okay, but probably not, because you would have waited for the funds to come into the account before doing the transaction. Okay, so this is just showing a set-off in terms of let's pay for the expense ourselves on behalf of our clients. Does that make sense? Okay, so if we look at the journal entry, you'll see there they have a debit for the client and a credit for the trust creditor. Okay, trust creditor meaning? Credit meaning? There's an amount that's owed to who? The business. Okay, the person that's recording the amount, or the person who's entitled to the amount. That's the key. Okay, entitlements. Right, so AZL is now a debtor in the client's books. Well, they've put client, not client's books, in the business's books. Okay, they're now seen as what? An asset rather than a liability, because do they have to pay them? Yes, they do. Okay, the client has to pay the business. Okay, because the business did them a favor by paying for the expense themselves. Right, and that's what they've shown here. They've shown this transfer. Okay, where did the transfer come from? The bank accounts. Okay. Right, then they've given you a few extra tier accounts there just to show that. Let's look at another example. Right, so how many partners do we have here? How many partners?
Judas, Anthony, and partners the partners
Could be more than one.
could be 10.
Exactly. Okay, so we need to look at what? The information in the question. Okay, so trial balance, fixed capital, J and A, and then you've got notes here. Trust payables and client control. Okay, so trust payables means what? Amount that needs to be paid, seen as a liability, an amount that's owed. Owed to who? To the client, exactly. So how many clients does this business have? 3 clients, looking at their records. Okay, then they've given you some transactions here. What are transactions going to do to those amounts? They're going to change some of those amounts. Why? Some of this is a business expense, some of this is a client expense. Good. Okay, so more practice. I want you to go down the list and I want you to tell me business or client. Question mark. If it's a business, it will go to the normal CPJ or CRJ. If it's a client expense, it will go to the trust account, trust accounting journals. Trust. So TCRJ or TCPJ, trust payments or trust receipts. Okay, so go down the list, identify what's happening there. Whose transaction is it? Great, so you've gone through the list. I just want to quickly explain the different journals here. Okay, you'll see in the required, they asked you for subsidiary journals. A subsidiary journal is a form of, let's say, record keeping that groups a specific transaction. Okay, so you get CRJ, CPJ. CRJ keeps all your receipts, CPJ keeps all your payments. It keeps a specific type of transaction. Okay, so when looking at the cash receipts journal, you'll have 2. You'll have a cash receipts journal of the business, but they've called that the fees journal, okay, instead of cash receipts journal. Okay, because is a law practice going to be buying and selling goods? No. Is a law practice going to be earning fees, services rendered? Yes. Okay, so this is similar to a CRJ, that's all, but a business CRJ. Okay, business meaning receipts that the business is entitled to. Okay, then you've got the trust CPJ and the trust CRJ. When you see the word trust, whose books are you looking at? Exactly, clients. Then you've got business CPJ and you've got general journal. General we know is for everything else. Okay, so let's have a look at those transactions. Transaction number 1. Read it and tell me what you think. What did you say? Read it out loud.
Paid the net amount of 2,564 and collected from J. Jason to the instructing attorneys V. Bowers and S. Scott.
Okay, good. So, if I'm paying the net amount, okay, collected from Jason to the instructing attorneys, okay, who are we in this scenario? Correct. Okay, we're running the law practice. So in this scenario, we paid the net amount collected from J to the instructing attorneys B and S. Thoughts?
The client, obviously. I'm guessing J. Jason is the client.
Collected from Jason.
From J. Jason. So basically, we took the amount from him and paid it to another attorney for another law practice.
B and S.
Yes.
Correct. So where would you want to put this? Client, receipt, or payment?
Payment, sorry.
Yeah, it's a payment because it's paid the net amount. Do you agree? Okay, because obviously there needs to be some sort of resource sitting in the account for Jason before making payment. So when looking at, it'll definitely go trust, right? Because it's the client. Okay, trust CPJ, trust CRJ, trust C, PJ. There's it there. See? Trust CPJ. Okay, that's the key. There's Bowers and Scott. Okay, it's really simple. Remember, the key is always what? Whose payment? Business or the client? And who must pay it? The client or the business? Right, if you keep it simple, it's really quite easy to do. Okay, so trust. Paid water, electricity. That's straightforward. Definitely. Okay, so normal CPJ. Normal, when I say normal, I'm referring to what we did previously, okay, in terms of a business accounting for a business's expenses. Okay, so let me just show you that. Where's the business? There's the business. Okay, there's it there, water and electricity. Okay, it's correct. Right, let's go through the rest. Received 7650 from B in respect of the registration of a bond in August. What month are we in? Good. We're in, no, we're not in June. We're in July. Yeah. Okay, so we're in July. When is this registration going to go through? August. So is this my money or theirs? Good. Client or the business? Client. Trust or business bank? Trust or business bank account? Trust bank account. Good. Okay, so this is a receipt. It's going to go in the trust. CRJ. Okay, so if we look at that, do we see B here? Yes, there's B. Trust CRJ 7650. Okay, that's how they're creating the actual journals. They're literally interpreting transactions. The key is, do you understand what's happening here? Okay, if you understand what's happening here, then it's easy to do that. Okay, that's the hardest part. It'll always be the most difficult bit. Okay, number 6. Paid advocate R with a trust check. That's important. Why? It's a trust check. What does that mean? Exactly. Right, to act as his defense counsel for H in the forthcoming case. Right, so what's happening? Describe what's happening. How many parties involved? 3. Client, business, and advocate. So, what happened? The business took money from the client's account to pay the outside advocates. Perfect. There you go. So now you understand what's happening. Business or trust? Good. Trust CPJ. Okay, so we should see that here. Do we? Yes, we do. Okay, there's HF, Advocate Davenport. That's what we got. Right, next. Interpretation is everything. What happened number 9? Okay, so why do they talk about a debit and not a credit? Question. If it's a fee, is that an income? Yes. So why are we looking at a debit, not a credit? Do you know? Or must I tell you? Think about it. Remember we said the business is going to keep track of both parties' accounts. Okay, so remember, does the client keep track of their own receipts and payments? No, they don't. They trust the attorney to do that. Okay, they expect the attorney to have a record for them and a record for their own business. Right, so if I'm looking at a debit, it's a debit for whose account? For the client's account, exactly. And in my books, how do I view my clients? As, well, similar to a creditor, because I'm owing them. Okay, what they give me is not mine until I've rendered a service. Have you rendered a service?
No.
Yes. A fee. Okay, you've rendered a service. Okay, so I've rendered a service to a client as part of this divorce case. Are the fees income for the business? Yes. Is this an expense for the client? Yes. Okay, so that's what we're going to be looking at here. Okay, so where's the fees journal? There's the fees journal. Okay, Peacock is going to record an amount as a fee for the business and a debit for their client account. Okay, why? Because their client account is going to decrease. You could have called this a trade payables account. Not trade payables. What was the right word? Trust payables. That's it. Sorry, I used the word trade payables. Okay, trust payables. Why? It's the client's money. It's the client that's actually paying this, but paying it to the business. Okay. Next, what happened here?
A check for 862 received from S in June 20, in respect of the registration of the bond, was returned back with paying amount.
Easy, right? As soon as you see check RD, you know this is what? Dishonored check. If it's a dishonored check, where do they always go?
To the
Cash payments journal, exactly. So, do you agree? We thought we received money from a client, but we didn't. So, must I reverse that out? Yes, you do. Okay, you reverse out receipts through the payments. And that's why I'm going to capture this in my trust account for my CPJ. There's it there. Okay. Trust cash payments journal. Again, you can learn that. Dishonored checks always go to the CPJ. It's the same as the bank recon. It's the same here as well. Basics don't change. Okay, 13. What happened?
We received 3,450 from SU14, a client who requested Mr. Anthony to act as his defense counsel in the court.
Thoughts?
So, basically the client gave us a deposit.
Exactly. So if the client's giving us a deposit, whose money is it?
Still the client.
It's still the client's money. So if the client is giving us money, we need to put it in a trust bank account because it's not ours until we've done something on their behalf. Okay, so 13 is going to go to the trust CRJ. Okay, I need to write these in again. I haven't been writing them in. Okay, next. Paid the sheriff 25 for the delivery of a summons. Why? Would the client pay this? No. Okay, because remember, what does the client require you to do? Represent them. But remember, certain expenses are the businesses and certain expenses are the clients. Okay, so this is for a sheriff that had to deliver a summons. Right, so you're actually paying someone to do something for you as a business, not as a client. Okay, so this is going to go where? Business CPJ, yes. Okay, so let's have a look. There's it there. Business, no, you can't say fees, it's not income.
I kind of confused them, but
Oh, okay, yeah, it's business CPJ. Just think about it logically. We have to run a business, we have to do certain things for the client. This is our expense because we're paying the sheriff to do something for us. Okay, they're doing something for us. They're not doing something for the client. Okay, you're doing something for the client, but you're asking the sheriff to do something for you. Does that make sense? Okay. Next. What happened here?
charged interest of 10 rand on the error account and cost.
Okay, so if you're charging interest, who would you charge interest to?
The business is being charged interest.
No, charge interest of 10 on the rear account of M.
The client is
Are you allowed to charge a client interest?
yes,
Why would you?
not paying.
Well, okay, that's different. So, okay, that's something that you would have to agree on because if you've used some of your resources, okay, it wouldn't be fair though to do that. So, you would have to like actually like specifically state that, well, if you don't pay, then I'm going to start charging you interest. Right. I would assume this is a normal debtors creditors type scenario. Okay, I wouldn't say M is a client. Okay, I wouldn't say M is a client here. Here we just say charge interest of 10 on the rear account of M. Okay, so M could have been a normal debtor, right? Unless they specifically said this was a client, right? Because charging interest to your client, that wouldn't be fair, right? That'll be a little bit like the gray area, like sort of touching on the unethical side of things. Okay, so I wouldn't look at that as being a client. I'd be looking at it as a normal debtor. Okay, so did you have a debtor's journal? No, you had a general journal. Okay, so what's going to happen to the debtor if you're charging them interest? What's going to happen to their account, up or down? It's going to go up. So how do you increase a debtor? Debit their accounts. Interest income is what type of account? Income. How would you increase income? Credited, right? Okay, so I would put this to the general journal. Let's see what they did. Okay, they did say they're a client. Interesting. But if it was a client, you're charging them interest, they're actually seen as a debtor rather than a creditor. Okay, then you would have had to have a debit balance for the client. Okay, so then you wouldn't have had a trust payable, you would have had a trust receivable, basically, if we're relating it to what they're looking at here. Okay, so whether it was a client or not isn't really that important. This is an asset, that's an income. Okay, right, so that's fine. So if you went with client, that's also okay. Right, happy with that? Okay, let's carry on. Where are we? There we are. Paid SAPI for stationery. It's a business expense, easy. Paid rent for July? Easy. Business expense, right? Okay, so both of those, well, even the next one, pay the telephone? Still the business. Okay, so let's discuss all of those three in one go. Okay, so would you agree I would expect to see all of those three where? Business CPJ. Let's go and see. Is it there? Yes, it is. Stationery, rent, telephone, perfect. Simple, easy, nothing difficult about that. Right, what happened in the last transaction?
They issued a debit note of 225 to NMOC in respect of fees for the remaining fees of the
Come, thoughts?
NMOC owes.
Huh?
NMOC owes us.
Does he owe you?
No.
Ooh. Clients don't actually owe you. Right, they only owe you if you have a dishonored check. Okay, where because remember, they give you capital up front, and then you do what you need to do. Do you agree? The only time where they might owe you, perhaps, is maybe you need more resources. So let's say they gave you 10, but now you needed 15, right? And then you'll probably have to go to the client and ask for the extra 5, but in the meantime, instead of having to wait and like delay the case, you'd probably pay that out of your own expense, and then you would have that debit from the client. Does that make sense? Okay, so just rephrase what you said now. What's happening here? Okay, a debit note is a source document that records a debit in a specific account. Okay, so you would have debited what?
So basically, we took money out of the trust account to pay off whatever we'll be doing with the drawing off of the.
There we go, now you got it. Right? Okay, so that's actually what happened. So debit note just means it's a note, it's a source document that's used to record a debit for a specific transaction. Okay, so I'm debiting his account with the fee. Okay, so fees for the business is a income. Okay, so you would put that in the CRJ, or in this case the fees journal. Right, so is it there? Yes, it is. There's it there. Fees journal for the rent. Right, and that's it. That's how you do trust receipts and payments. Okay, the key, the theory is very basic. Okay, all you literally needed to know was what we spoke about earlier, this. What's the client's and what's mine? If it's mine, it goes where? CPJ, CRJ, or fees. Okay, fees journal, depending on what they give you. Okay, if it's client, where does it go? Trust accounts, exactly. Right, and that's it. That's basically what you need to take away, and then you just need to do more questions to practice it. Okay, but yeah, the textbook example is very good. Okay, they've given you everything here, and they've given you the columns as well, right? So you would literally just record it in those specific accounts, just applying the rules. Right, happy with that? Perfect. Okay, maybe just to show you the ledgers. Remember, a ledger is a T account where you have a debit side and a credit side. And you would either increase or decrease the accounts depending on the transaction that's taking place. Okay, so there weren't too many transactions here, so you'll see most of these just have one line. This one has more than one. Why? Because you have receipts and payments. Payments reduce the bank. Receipts increase the bank. Same basics apply. Bank is still bank. It's either bank for the client or bank for the business. That's it. It's literally a duplication of a bank account. Okay, you've got one bank account for them, one bank account for us, and we need to keep it separate. And that's it. That's how it works. Okay. All right, so if you do get this, you should actually hope for things like this because it's an easy section. It's a nice section. And you guys can probably relate to it quite well because you're in that industry. Okay.